Now, for the purposes of clarity for this series of videos on using the Camarilla Levels Indicator, I'm going to use one chart just to make it clearer in terms of the video. But of course, as always, you would be looking at this from a multi-time frame approach, whatever market you're trading. So I just wanted to make that point. We're on a 5-minute chart here. And I've also taken this approach because I want to try and explode the levels as best I can to show you in detail what is going on. And in this particular video, we're looking at a reversal opportunity. Now, the key levels for reversals are these two, which is the R3 at the top or the S3 at the bottom. And obviously, when we're looking at the R3 level in terms of reversal, what we're looking for is a reversal from bearish to bullish, in other words, the downside. And equally, if price approaches the S3 level, then what we're looking for potentially there is a reversal of bearish to bullish. So those are the key levels. And if you remember from the introductory video, these two levels here, the R1 and the S1, this is our buffer zone where we can expect some congestion to follow. And in terms of potential targets for these reversal opportunities, when we get a reversal as we have here, we've approached the R3 level, you can see. We are now seeing that reversal come into effect. In terms of a potential target for that reversal, what we're looking at then is the other end of the spectrum. So we're looking down here at the S3. So in other words, not only are the R3 and S3 important levels from a potential reversal perspective, they also mirror one another in terms of the potential target as to where we might expect that particular reversal trade to take us. So in this case, we're on the spot pound yen here on 5-minute, and the potential target is to get down to the equivalent S3 down here. And this is really the multifaceted aspect of the indicator that not only does it give us these potential levels for reversals, which we're looking at here, and also breakouts, which we'll look at in another video, but we're looking at reversals here particularly. It also gives us the potential targets that we can expect or potentially expect that particular reversal trade to carry us. And in addition to that, if I just reduce see if we can pull, there we go, just pull the next level down, which is our R4 above and our S4 below. Another way of using the indicator is, again, as I mentioned in the introductory video, is to use the levels that we're given for potential stop loss placement. Now, of course, your stop loss placement will very much depend on your risk profile. But a lot of traders use the next level up as the stop loss. So in this case, we potentially use the R4. Now, that, as I say, that may be far too wide for you on this particular time frame. But nevertheless, it is another aspect of using the indicator where you can take those particular levels and use them for your stop loss positioning. Right, let's just expand that up again. There we go. So we're back to pretty much full screen. That's it. There we go. So it now looks as though we are breaking away. Let's see if we get some congestion within the buffer zone between the R1 here and the S1 here. What we're looking for now is our potential target to get us down to the S3 level. Now, in addition to that, we also deliver these levels, signals over here to help give you a heads up to the potential opportunity that is developing. And in this case, we had the message that came up and said possible mean reversal trade is on the horizon. In other words, we've reached a potential reversal point up here as we get to the R3 level, which we tested a couple of times. Okay, bounced off here, didn't follow through, came back, retested it. We've got a nice 2-bar reversal up here. More bearish engulfing signals here, and off we go to the downside. So these signals will appear, and you can certainly use them as guidance to give you a heads up as to when price is approaching these key levels, of which the R3 and the R4 are the most significant. And once we've breached the R4, and we'll look at those on breakout trading, then R5 and R6 become equally important also. So this is an introductory video, if you like, to reversal trading. And in this case, it was a reversal from bullish to bearish off the R3. But equally, it could have been a reversal of the S3 from bearish to bullish in the other direction. And now what we're seeing potentially is some congestion building in the buffer zone in the R1, S1, which is what we expect to see. And hopefully if this continues, it will continue further, possibly down to the S3 level. Not guaranteed, of course. But that just gives you a target, a mental target of where this reversal opportunity could potentially take us. So I hope you've enjoyed this particular video. Lots more to come on the Camarilla Levels Indicator. Thanks for watching, and see you soon, and bye for now.